There will continue to be upward pressure on prices and rents for the foreseeable future, with no end in sight for the imbalance between supply and demand in residential property markets across Australia. National valuation firm Herron Todd White reports that nationally, home prices have increased for 17 consecutive months, and the median home price for Australia is now $784,000. According to Oxford Economics, the nation's housing supply and affordability crisis is likely to deepen and will remain a chronic issue for years to come. Oxford Economics is predicting we will fall well short of the federal government's ambitious plan to build 1.2 million new homes over the next 5 years. A new report from the firm, which is called Building in Australia, forecasts just 960,000 new homes will be built between now and 2029, which is well short of the 1.2 million target in the government's National Housing Accord. The figures underline industry fears that it will struggle to keep up with the ongoing population rise fueled by a wave of new migrants, and also not helped by labour shortages, dysfunctional planning systems, and high construction costs. The report author, Timothy Herbert, who is Oxford Economics Head of Property and Building, says while new housing construction could well reach record levels by the end of the decade, it won't be enough to keep up with demand in the meantime. Herbert says, while industry capacity is showing signs of improvement in some areas, labour shortages remain that will place a speed limit on the early to mid stages of the recovery. But he also says we will continue to experience a dwelling stock deficiency, but activity will inevitably recover in the residential sector. All build forms will contribute, driving total dwelling commencements to a new record level by the end of the decade. He says attached dwellings are forecast to join the upward swing from financial year 2026, with support from falling interest rates, the upward rebasing of rents, social housing investment, and planning tweaks in key markets. He says build-to-rent development has risen to around 1/5 of apartment starts and is expected to grow this year a little further through to the late decade. This report adds to the views of many others that the federal government's stated goals for housing construction were never realistic and had no chance of being achieved, and therefore the shortage would not be adequately addressed, keeping pressure on prices and rents. The Housing Industry Association earlier this month warned the government would fall well short of its housing targets by 64,000 properties in the first year alone. To reach the 1.2 million target by the end of June 2029, an average of 240,000 homes need to be built each year, a level that has never been achieved in the nation's history. Only 963,000 new homes were completed over the past 5 years, despite the pandemic home builder stimulus, which sent building levels to record highs. The HIO is calling for tax relief, planning reforms, and incentives to attract more workers to the industry in order to avoid what it predicts will be a 180,000 home shortfall over the next 5 years. And the government-appointed independent advisory body, the National Housing Supply and Affordability Council, has also shot down the government's targets, estimating a home shortfall of almost 300,000. And it predicts the private market will only be able to supply 903,000 new homes up to 2029. So what does that mean for property investors? It means that investors who can offer new rental properties to the market are likely to be rewarded with capital growth and good rental returns.